Yep. How's everyone doing this morning? We got 15 in here right now, so we'll wait for about 5 more before I start the bias off. But right now I'm bullish. Looking for London highs, short-term target. We do have Powell speaking right now, but I don't really look at that as I mentioned yesterday in the market review. I don't really look at this Powell speaking as high of an impact as last week, just based off of what he's talking about. But I could be wrong, and this is something I'm willing to learn on. But he's talking at an international press conference. In my eyes, it's not going to have nearly as much effect as it would if he's talking in front of just the U.S. about, from the Federal Reserve perspective instead of a international banking perspective. So I don't really think there's going to be too much that goes on right at 9:30 compared to just the normal volatility. Like I said, if I'm wrong, I'm willing to learn on that. So we'll see how it goes. But right now I'm looking at preferably this 1 minute gap to be used as inversion. It's currently stuck within this 1 hour gap in the higher time frame and at the upper quadrant of it. And then obviously this 1 minute inefficiency. So we'll see it right now. It's not really closing above with any speed. It is definitely stalling out. Yeah, the gap right now that I've marked out, the gray box, is a 4 hour IRL. It's either a 4 hour or 1 hour. I believe it's 4 hour. It's a 4 hour, yeah. So 4 hour inefficiency there. But we got about 18 in here. Let me go get some water. ES is starting to climb, which is good. I want to get out of that 5 minute inefficiency, start to displace. Nasdaq's having a little bit of trouble getting through that 5 minute inefficiency. There's 5 minutes to the left. You can see over here, 5 minute inefficient. It's not really inefficient, but just the gap there. So bias is bullish, and the reason for that is we have an inefficiency on the 4 hour that we've been reusing. We're currently in this consolidation range prior to NFP, so expected in some sense, but I do want to see if it can start to move higher. Obviously, we have all-time highs, and just the fact that we bullish last week and profile right now is bullish. So looking for that as kind of the short-term draw. Now on the 1 hour, it's starting to line up a little bit more too. Came down, took out the previous daily low, wicked it, stay within the gap. That's an ERL in terms of previous daily low, right? So what do we look for? Preferably a gap in premium. We have an inefficiency there on the 1 hour, inefficiency there on the 1 hour. And then this wick here is the London high. And you can see all of this low resistance buy side being printed over here and even over up here with the previous daily high. And then on the 15-minute chart, same exact thing. Smooth relative equal highs all in here, up to London high, Asian high, PM session high. So coming into it, I'm favoring a run up. It doesn't have to come all the way to the external range, but if it wants to just run up and tag London high, that's my current draw. For bearish price action, I guess we have the new week opening gap and more of these. But if we were to come down and actually fill this one, I can see this one here to me looks completely balanced. So if we were to come down and tag into this, to me we're more likely to go for that sell side than we are to expand up to that buy side. So I want to just be watching it. Obviously today, I mentioned right at the start of this, we had Powell speaking at 9:30. I don't think it's going to have nearly as much effect, preferably, as Powell speaking last week, just because the monetary policy he was talking about last week following the Iran bombing is going to have much more of a high impact on the dollar and the Euro USD and obviously the stock market than him speaking today at an international press conference. So for me, I'm willing to learn on this. Is him actually talking about something important going to affect the market more than just his name being on the board? If his name being on the board does the same effect as it always does, well then I'm wrong in that assumption, and I'm willing to learn on it and obviously correct my preconceived notions and beliefs about that statement. We do also have 10 a.m. news today, which is red folder. So if anything, that's still going to be played out as normal. And we're just using 9:30 and 10 o'clock today as the kind of those two more important kind of PD arrays, or not PD arrays, but functions of time. ES right now is a little bit more, has more strength in it. We have this inefficiency here, not the first presentation gap, but still an inefficiency. And we have all these smooth up to there. So to me, that looks pretty low resistance, likely as a draw. And we're going to just send it up there, at least for the short term. And if anything past London high to me is extra in that sense. All right. So that's what I'm looking for. It's a little cold in my room. Let me get a hoodie. But I did do a market review last night. That will be posted shortly. It was pretty late. I think we finished at like 11:30 or something. So if you missed it, don't worry. We'll post that up later today. But you can see this gap right now being used multiple times. And to me, this looks like it's building right for 10 a.m. spike. This consolidation right before. I want to see if YM is dropping here. The YM just spikes up. Oh, we do have SMT there. So nice and low. And then you also do have a Vantix model at the bottom here if Interstellar's in here. Or any of the guys that have been using that recently. And if it hits the London high, then even if it doesn't hit the London high, I'll show you that entry there. Now, I do have this 5-minute gap over here that we're trading into multiple times. But past it, there's not a lot of inefficiencies. You have this here, which to me is balanced, right? So that's not really a true inefficiency, nor is it going to really cause a lot of speed bumps. Breakaway gaps, when traded through on the other side, create very little resistance because they're balanced, right? So you don't have to come through it, form an order block, etc. So here, don't really expect a lot. You can maybe just a little bit of it. Swing highs are also premium arrays. So you maybe want to be watching those, but really this here is a bit more of a cluster I'd be watching just because it's relatively equal. This one here is relatively equal with this one. So if we were to even tag out that high, my expectation is we're just going to go right through it and speed through. We're in that upper 75%. So any swing high or inefficiency in the 75% of it should be blasted through. That's where you see breakaway gaps form, like on that higher end of the buy model. So my eyes right now are on these two, kind of the low hanging, if we can get there. And then obviously the London high. They got the absolute consolidation of doom. I'm still watching the candle bodies. They are still very low, but to me this looks like it probably is going to go for this now. Just so you can as a purge and revert. Is CBDR and flout just fancy words for Asia range? Is there any way to use it for the market truths? CBDR and flout are Forex specific terminology. It's not Asian range. Asian range is sometimes a part of those two, but CBDR and flout, the way that they're used is completely different from what I understand to be the Asian range. I could be completely wrong on that, but it's not something that ICT uses now, to my understanding, at least in the futures market. He never really used it there. Nor do I use it, or really anyone. I don't see anyone using CBDR and flout. I've maybe seen one person use CBDR, but flout is, I think, an old thing. Like I saw him post one time about you got displacement now, closure, right? Let's just watch. Most likely going to come down and take that low up. But yeah, don't worry about those two. When we have a consolidation like this at the open with bias for higher prices, we still need some sort of manipulation to move higher, right? So we should see expected trap shorts push higher. Yeah. I mean, this here to me is reasonable as manipulation, especially if we got back up above it. We don't have a SysD, which is not required, but it's still important to see that. But yeah, this I was not expecting this kind of consolidation. That's why I was saying I was willing to learn to see how is this really going to play out. I'm actually curious to see if it's being live streamed or not. If he's talking.
It's still somewhat below 2%. Then there's going to be perhaps a second component, which will be the...
Yeah, he's talking right now at a European Central Bank forum. I mean, you do have the Bank of England there, the Bank of Japan, both of which would be major banks. One is basically the leader of the Asian range, and one is the leader of the European range, or London. So, but it's just a forum, right? So they're just yapping together about nothing. If you know, you know exactly. Yeah, Japan is where the the Asian range comes from. Most liquidity from the Japanese central bank, and then London is normally the European central bank. And they're normally the ones that intervene with the market as well. At least that's what it says in the document. So dropping down, touching CE. Still no first presentation gap that I see to be high quality. Or really any 1 minute gap for that matter. I mean, you could use this one here, but not super inclined. 944. Unfortunate. ES and YM are just slamming right towards the London high. Took it out here. ES climbing towards it. Nasdaq's the only one that lags behind. Yeah, it's still holding this order block with the it's not really inefficient, but order block. You know, even on the 1 minute, it still looks healthy to me. Consolidation range, sweeping the low. You got a balanced price range forming in here, so I would prefer if this is left open. I want to see if this is left open as a breakaway. This would be used as like a reclaimed inefficiency. If it comes back and touches, obviously, if it touches into it a little bit, it's fine. But if it starts to close past consequent encroachment, we're going to stay within that consolidation range, and I'm going to wait for the news. So a little bit is fine there. There's a lot of gaps here. I apologize. I'll remove this one for now. Yeah, nope. All right, so we're back to consolidation. So now I'm just waiting for the external range to be taken out. I'm not going to read any PD rates between the two. In consolidation ranges, you typically don't want to be... Candle closure is still important here, but in consolidation ranges, you will burn a lot of mental capital trying to mark out PD arrays, trying to mark out gaps when gaps aren't really going to be used, because in a consolidation range, you'll be seeing gaps up, gaps down, gaps up, gaps down, and if you keep trying to mark out each individual one, a lot of times it's not going to do something rational. And what that one quote of the market can stay irrational longer than you can stay solvent is extremely true, especially in consolidation ranges. So, and here you got a nice wick down. It does pass consequent encroachment, which I guess maybe you can include the volume imbalance, but it doesn't matter. Now it's trading up through here. If we get a closure with this candle past the wick of this, that's one of the strongest algorithmic signatures that you can find. Is when you have a wick that takes out bicep like this, and then a closure back above with the second candle immediately above that wick high. In this case, it's almost being used as an immediate rebalance. If it can close back up here, still looks good for London high and the short-term targets that we've mentioned. And now you also have a low, high, lower low, potentially, that could be used as the last manipulation leg for the day and for the session, more importantly, and that puts you up towards Asian high. So I'll screenshot this really quickly. Mark this as an inefficiency. So it didn't get all the juice we wanted there. No problem. A 2-minute gap hopefully forming. But we need to start seeing breakaway gaps. So if this 2-minute gap forms here and is left open, that's nice. You don't really have it. You can still see the wicks back and forth, right? So like I said before, to the left of it, what do you have in terms of a speed bump? You don't really have much. You could see this potentially as one, but it's not really in premium. And this gap is not inefficient, more of a breakaway gap. You look right to the left of it, boom, you have this balanced price range right in here, worked right through that y-axis with selling, buying, selling again. That's going to be breakaway gap for this sell model. But as breakaway gap is then traded through over here, you do not expect a lot of resistance through that area. Right, you expect kind of low resistance sweep. Nice immediate rebalance there. That 2-minute gap should be left open. Nice. So you want to see just to read it. And if I'm wrong, this is something where it can be wrong and the drawn liquidity is probably still right. So this is something that you can easily test to see, is this tape reading skill or my PD array being marked out being used the way that I would like to see it? Or if you have something new that you want to be testing, this is the way you do it, right? You have a tape read, get your bias, mark out the stuff you normally mark out, and then just see, okay, if this is my expectation for this PD array or this whatever it is, mark it out, speak it out loud, or maybe write it down in your own Discord or in your own Notion or whatever, and just watch it. Sometimes we're too addicted to being right, and even if it's not in front of anyone, just to be right. And that's why, you know, even if if you're in Discord and things like that, being right in front of other people, sometimes you're just adding in more stress and problems than you need. So this kind of thing, okay, if I'm wrong, what's going to happen? Nothing's going to happen. I'm just going to learn from it. Okay, but my assumption is this inefficiency on the 5-minute here should not be holding. And if it does hold, well, then to me, it validates the fact that, okay, I read that right. And in the future, that's something that potentially I can use. If you never mark it out and you're always just studying for value gaps, you never study anything else, sure, that's maybe all you need, and that's perfectly fine. But if you really wanted to improve and obviously grow to the trader that you know you can become, it requires taking risks in learning, right? Being wrong, and being wrong sometimes when you don't want to be wrong, losing. That's what is required. And every single loss, every single trade, you need to be asking yourself, obviously, is it a high conviction trade? but is it something that I'm willing to learn on? If you're very rigid with your trade or rigid with your PD remarkings and you don't want to be wrong, or like it has to do this, as soon as it has to do something, then you're going to take it a very poor way, right? It's going to become an attack on you and you're no longer able to see it for what it is and you take it personally. Why would you want to take it personally? Just test it out, see if you're right, and then if you follow the plan, you know exactly what went wrong. If you deviate from the plan, well, now you're incorporating a bunch of different variables that you don't know what is going to be the actual thing that went wrong there. Right? When you can isolate the variable to, okay, this is exactly what went wrong, then in the future, you know, okay, in the future, when this happens, it may be a very simple mistake, but hating to lose and hating to be wrong is hating to learn. And if you're in ICTs kind of mentorship, if you're in this mentorship, if you're in anything related to trading, that is just a fact that you have to accept, is the fact that number one, the best you can reach is 99%. You can never reach 100%. And that number two, you're always going to be learning about yourself, about your model, and how to even if it's a 0.01% improvement, you're always looking for that. And not as a shiny object syndrome, but more as a humble approach to increasing your obviously the probabilities of winning and the RR and things like that is all great, but just becoming a better trader, right? So we have a 2-minute gap down here. I actually may watch it just on the 3 because this looks way cleaner to read. Inefficiency there, pair with a what? During what time? So we don't tag it on the 2. On the 3 we do with the order block. I'm going to be watching this market maker buy model now. Put 3 limit orders in there. So what I'm doing here is on the 3-minute, right? We got an inefficiency being traded into plus the bullish order block. I don't know if it's going to continue to go down or if it wants to start to leave this. So easy way is go to the 1-minute. Is there a SIST? It's up there. Okay, that's not bad. Can use that. Or on a 15-second chart, if I can identify this market maker buy model and the stages of it, then I know we're back into a buy program. Like right here, right? You see the VI wicks into it, comes back up. You got a gap here. If it wants to close obviously above that, that could be a potential signal. Right, obviously taking the stops there is nice. But if you can see fractally that buy model, it's a very advanced entry technique. So if you're new or if you're even intermediate and this is complicated for you, don't worry about it too much. Just the main part is obviously 3-minute gap being traded into with inefficiency during what time? Obviously it's before the news driver, so still be mindful of that. I want to be seeing if ES and YM are so, oh my gosh. But YM looks healthy. ES looks pretty healthy. 5-minute gap and we fell below the London high. So to me, it looks like we're still good to go. 2-minute gap being filled in there. Notice how I said in the beginning, I want to see breakaway gaps forming. Notice on the 1-minute chart between this low and this high, there's no inefficiencies. Nor is on any of the time frames from 5, 4, 3, 2, 1, there's no breakaway gaps. In any given market maker buy model, towards your bias, towards your correct draw, if your draw is correct, there should be breakaway gaps. Just very simple. That there's got to be displacement towards that target and an unwillingness to fill those gaps because they're going to be balanced. Or even if they're imbalanced, the strength of that draw is going to be like a magnet. It wants to pull it up there. It's not going to fill every single gap. If it's doing that, it's high resistance or it's low probability conditions. And you can see it's coming back into and touching the it shouldn't be doing that, right? So it's staying in this consolidation pattern. And if at opening range, this news drops, takes out this low, I maybe turn it off, to be honest. I don't want to be in a Powell mess if that's what this is. And nor do I really want to be waiting an hour to get a last-ditch macro for a scalp. I don't really have that patience today. But, and this is a very good, what I've found this to be a very good entry technique is when you have a large inefficiency that's being traded into, instead of trying to catch the bottom, almost the falling dagger analogy, where if you have a gap here, sometimes you don't want to be putting a limit order there because then you get to place your stop here or here, right? It's too far. So anyone who's advanced in their learning will know that this is a short-term fractal sell model, or a sell program. And as we start to have a SSD in a lower time frame, it goes back into a fractal buy model, which to me would be in line with where the daily and the session draw would be. So when you see that, okay, well, now you know, what are you looking for? A confirmation of reversal, preferably SMT at the lows, right? Some sort of, you don't even need to see the SMT at the bottom. Of course, if you want to get the lowest tick, you need that. But if you're fine with getting a little bit of a further move, you just wait for some sort of inversion gap or SSD or a shift. And that indicates to me that low of that retracement leg or this sell model is completed. We're going back into a buy model. What does that mean? You can place a stop at that low. We got news here in 2 seconds. Let's see. Trades back into the inefficiency. You're going to have a little actual, never mind. But you notice the closure there and the opening there. A little bit skewed. So 10 a.m. Last number on the board where we should start to now see one-sided price direction, price delivery. You can see how I just wicked out both sides. But it didn't actually go past the extremes there or there. It still doesn't look. This. What does ES do? Looking back into there. It doesn't look too bad. This is way more smooth too. I'm trying to argue both sides, see if I'm wrong. But jagged down here, stop run there, retracement, deep retracement, smooth all up the buy side, failure to reach any premium array after we took out current daily low or previous daily low there. There's no 15-minute gap in premium here. First one would be there. So yeah, London high. Yeah, I'm pretty confident in the bias. Obviously, if I'm wrong, it is what it is, but I don't want to flip here. Look for shorts. If it, like I said, if the news had come down and taken out the AM low, then probably would have sat out. This is nasty price action though. This to me is if the end of the macro here does not start pumping up, and it starts to consolidate more into silver bullet, right? I've said before, if you're hesitant about a bias, let the opening range play out. Let the opening range play out. Normally that'll give you the manipulation. Start to give that one-sided direction, preferably going into 950 macro, sometimes after it or late into it. If we are stuck within that consolidation range, still going into silver bullet hour, that's normally a telltale sign to leave it, right? And if you look at, okay, where are the extremes formed at? What time was this formed at? 8:26. What time is the high formed at? Well, I mean, over here you do, but between the ranges of 2 a.m. to 12 p.m., London high, a New York session low, what would this be? Potentially a swing to C based off of what we're seeing right now. Do I want that to happen? Not really. Since we do have this high impact news, the first one of the week. It's not a major one. It's not 8:30 or anything like that. Yeah, I don't know about this now. Five minute. What do you want, MNQ? Yeah, probably why. That's why I don't chart on that. You can't really chart on it. It's not reliable enough. You got weird gaps, weird VIs, price discrepancies. I don't like it at all. I'll clear some of this mess out. We still can't get any bissies. Yeah, that's what I do. If I'm ever trading MNQ, I'll chart on Nasdaq all the time, and then put a limit order and fill my orders on MNQ. You can still obviously get the targets and things the same, but charting wise, like to read price, I don't. This is what I wanted to see. I don't use MNQ. And anyone who I've mentored before probably told you don't take your screenshots on MNQ either. So you can get into this gap. If it drops into there, I'm willing to buy it. See if you can get leave. Oh, there you go. Nope. Still not giving me the reaction I want. I need that aggression. I just needed to, like how YM was printing. Like I need that on a 1 minute, on a 15-second 1 minute time frame. Like look how YM, boom, gap, breakaway gap, breakaway gap, breakaway gap, breakaway gap. That's what you want to see. And any time you have a directional bias, you want to see that. It just quickly sending, and preferably you're going to see gaps, breakaway gaps form in 3 areas. 1 near the bottom of the SMR, preferably as a balanced price range. 2 right in the middle as it's forming and leaving the first stage of distribution in a market maker buy model. And the third one would be at the highest range, the top range of 0.75 of that implied dealing range, where after you have the silver bullet, where it's running towards the buy side, normally, if we're going to that buy side and even potentially go to -4, that's where you see the last leg of breakaways. So you kind of split them up almost into sections of where breakaway gaps would form. So obviously, depending on the model you're looking for, maybe where we are in the MMXM, seeing those breakaway gaps, and then obviously how we're holding PD arrays is super important. And to me, it's one of those filters, right? Like if you see me say on the ETM model, a good filter is the 5 minute SysD. before you look at the 1 minute entries, because at that point, okay, if the 5 minute order flow is in line, you can trust 1 minute PD raise to hold. Same exact thing on a market maker model. For a market maker model to be formed and shown, if it's a low resistance one and not a high resistance one, you should be seeing breakaway gaps. It's just part of the programming. When you don't see the breakaway gaps form, we're either in high resistance conditions or a consolidation. All right, go back and see, okay, when we do have a market maker sell model, but we're not leaving breakaway gaps, it's normally going to be like forming a gap, leaving it, and then come back all the way to fill it, and then leaving a little bit. Then, oh, we left a gap here. Let me come all the way back up into that. That's high resistance, because a lot of times you're going to get stopped out on these kind of moves, even if it's an intermediate term high. And that's why, as you advance the model, the only times you may be taking losses for a couple of reasons. Number one, mismanaged stop loss, simple mistake. Number two, you read the bias wrong, which is also an easy fix if you know what you're looking for and what you did wrong. Number three is misidentifying the day to be high probability or low probability. All right, so you brought the wrong approach, the wrong tactical weaponry to be using to be trading that day. Doesn't work out. That's normally the three. And like I said before, if in the end of the macro time we're still within this, I don't really like it too much. I've been using this inefficiency multiple times. It's the first presentation, bisi. Like I would be genuinely surprised if anyone trading NASDAQ actually got in a trade today. I'm very curious to see what your executions would have been. If it was not at 9:30, I think the 9:30 trade is reasonable. If you're looking at a volatility injection or even as 10 a.m. But I don't think there's really anything in here, even during the macro time that I can argue is, oh, I can see where that was coming from. Had to have a strong bias or a scalping mindset. Let's see, starting to wilt lower efficiency there with the mitigation. You have one breakaway gap forming, but I don't want shorts. To me, this looks like Powell mess. What we saw last week, Tuesday, Wednesday. And it very well may stay like this until the last ditch macro. So I mentioned at the beginning, it's something I'm willing to learn on. So maybe at the start of, and this could be because of 10 a.m. news, it could be for the other reasons, but when I go back into my journal later today, I'm definitely going to write down, okay, even if Powell isn't talking on a US scale and it's just an international forum meeting, does that have any implications on price action? Something I want to look at and study for myself. You got SMT at those lows. The Newswick low. These guys look so much more bullish, though. I find it hard to believe that Nasdaq's not going to have any movement. I love it. Now you got finally some movement. Look at this. Boom. What is that? Breakaway. Speed. Coming back down into the breaker. Touching that. Starting to leave this again. Now you have ES and YM starting to pump up. So Nasdaq should follow. If it doesn't follow suit, I'm going to turn it off. But YM's taking out their high of day. That's actually started to be following suit. I'm looking for, we can take out that AM session high, give a gap on the 1 minute, retrace into that gap, use the breakaway almost as an inversion. I'll take that. That's the speed. Or if it even comes down and touches this. If it even comes down and touches this, I'm turning it off too. And I'll be done for the day. This should be left open. It can come down halfway, that's fine, but I do not want it to come all the way down and fill that gap. Now if we can stay within this order block here, extremely strong. Doesn't want to do it. It's gotta stay within that candle body. Okay. I said extremely strong. Right below the candle body. Expecting this to be lifted off as breakaway. You can go back to midnight opening if we're bullish. I'll screenshot this. It's a demo trade. Looking for longs up to, I'll put it up here. Sell 2 on a limit on a London high. Like I said, everything past that was extra. It's now below an intermediate term low. Put it 1 tick below. And now we can leave it. So like I said, that breakaway gap, right, shouldn't be used as a lot of resistance. Boom, closes right through. Preferably can come down, touch it a little bit, and then it should close back above that swing high. And the execution there was based on a 15-second breakaway gap. So this gap down here, I want it to be left open as it touched that, and then obviously use the order block there. So that's going to be pretty strong. So as it climbing back up, and then as it's dropping back down and almost using that as an inversion fair value gap like I was talking about, that's going to be my entry. Stop at the intermediate term low and looking for secondary displacement past the swing high and into the target, which would be the London high. The internal range liquidity in terms of the dealing range, but external for what we're looking for as it's moving from here to back up to the buy side. Gap there on the 1 minute. And actually, if you can get further move and actually start to displace and have a gap here and filling that gap, I'll actually pyramid in another 2 and then move these a little bit higher. Actually, you could even pyramid in 1 there off the inefficiency retracement. A little bit late to that draw, but there's a gap there on the 1 minute chart. You can see it. Inefficiency there, boom. Obviously touching into that inefficiency and also the inversion gap. Yep, that'll be posted. I'm going to post that one first, and then I'll post this one. See what they are doing. Like it. Closure through London high. Obviously, closure through London high. I took it at 932. but everything else looking healthy. Let's see if DXY wants to drop. Actually, fill a gap here. I just got stopped out. Let's see. Yep. All right, so I'll screenshot this and we can be done for the day. And it may come in and fill this and leave, but who cares? Just leaving this. It should be leaving that open as breakaway. Like I said, doesn't want to. Wants to come back in and touch this. I'm out. Fortunately, NASDAQ was just the weakest in terms of any movement of the three. Yeah. 2 days pre-NFP that are funky. Very rare that this happens. But live and you learn. Yep. I feel that, Creed. So, kind of finally be done for the day and walk away from the charts. Risk managed. Took in one trade. Conditions met for what I was looking for. Waited pretty patiently for the entry that I wanted to. About 42 minutes. Probably could have just not taken the trade, but yeah, very good day to be risk off. Exactly. So I don't want to touch this the rest of the day. I don't care if last ditch macro moves. I don't care if PM session moves. Probably do a mark review today since this is a losing trade. It's best to learn from these kind of days. And then no stress, right? It's much easier to look at. You know, if you manage your risk, what's going to happen? You manage your risk, you take good trades, you got more than the 2R and a 40% win rate, you're profitable. Simple as that. That's what the numbers are. So to me, it's just a trade is a trade, right? The wins, loses, doesn't matter. There's not really much more to it than that. You lose, you win. It is what it is. Risk managed, you know, and based on the account history of this one, very, very small loss compared to the wins that we've had previously on this account. So I was going to reset it in July. I want to get this up to 50K. So when it hits 50,000, we'll reset it and go back to 0 and restart it. So anyways, that'll do it for me today. Hopefully you either sat out today or learned from something, either for consolidation or maybe how to spot it or leave it alone, whatever it may be. I'll post that market review from last night up as well as this one. And we may have a market review later today, which will be recorded and posted as usual. But terrible PA, what can you do? Can't really do much. We're focusing on every day. How can we be better and do our job as traders? My job today was show up. If there's a good trade, take it. If there's not a good trade, don't take it. And you can continue on with your day, right? I'm going to go in and journal, and it is what it is. We continue on. You almost, to me, you know, you wake up and look how nice it's dropping here. So stop loss did its job and protected me. Pay that a lot of money to do its job, and it did its job perfectly fine. Yeah, you know, you journal, and when you wake up tomorrow, it's going to feel like you wake up the same way. You wake up on the same side of the bed. You probably wake up at the same time. It's like a restart of the day. And the only thing to me that brings meaning to it, and okay, did I actually use today and deserve my sleep? When you go back to lay your head down in the nighttime, did you deserve your sleep? As if you actually did all the things you said you were going to do and follow the process. So if you're supposed to be journaling, if you're supposed to be reading, if you're supposed to be managing your risk, things like that, how much longer are you going to delay? Right? How much longer are you going to delay? It's an inevitable thing, but delaying is going to do nothing but besides make more pain and more stress. So come into each day and just do what you have to do today, and that's it. Right? I did my job today. I know by tomorrow, by the time I wake up, I'll have more energy to do this same exact thing, and all my mental capital will be needed there. I'm not going to spend a bunch of mental capital and inflict more emotional damage on a day I don't need to be touching it, right? You already touched the stove once, got burned, it was a little too hot. Okay, we can't touch it again. Gotta wait till tomorrow to see if it cools down. But the insane will be to touch it over and over and over again, and they get a 3rd-degree burn and then wonder what the heck happened, or then start blaming the stove that it was hot instead of you for touching it. It's a good analogy, right? So anyways, like I said, I'll post this later. Journal, do the things that are necessary to succeed. And I will talk to you guys soon. Peace.